Sorry.
Virak sir, start Virak sir.
Yes, sir. It has been started.
Yes, sir. We are live, sir.
Okay. Good afternoon, everyone. Today we have Chartered CA Nikhil Gandhi. Nikhil Gandhi is a qualified chartered accountant. He is a member of the Institute of Chartered Accountancy as well as a diploma in IFRS London. He is having 8 years experience and industry experience and 2 years teaching experience. He worked in KPMG, Suzlon, and other companies in the accounts, finance, and taxation. So now I request Nikhil sir to kindly proceed the subject company accounts and audit.
Hello everyone. Good evening everyone. सबसे पहले तो मुझे मालूम है कि कोविड के कारण सिचुएशंस थोड़ी बहुत ऊपर नीचे हो गई है। तो सिचुएशंस थोड़ी बहुत ऊपर नीचे होने के कारण पढ़ाई अपनी उतनी अच्छी नहीं हो पा रही है। तो इंस्टीट्यूट ने एक बहुत अच्छा स्टेप लिया हुआ है कि सबसे पहले एक रिवीजन सीरीज रख दी है। तो बेसिकली मैं पेपर 12 CMA इंटरमीडिएट का पढ़ाने वाला हूँ अकाउंट्स एंड ऑडिट के रिलेटेड। तो ये जो सेशन है ये 3 पार्ट्स में बाइफरकेट होने वाला है। एक 10th का 11th एंड परसों 12th। हम तीनों दिन 2 to 5 आने वाले 3 आवर्स का सेशन होने वाला है ये। तो इसमें बेसिकली हम लोग ऐसी स्ट्रेटेजी यूज करने वाले कि सर हमारा मैक्सिमम पोर्शन कवर हो जाए विद मिनिमम इन्वेस्टमेंट्स ऑफ टाइम एंड उस चक्कर में हमारे थोड़े से ज्यादा अच्छे मार्क्स आ जाए। ठीक है, चलिए अगर आपको कोई भी कमेंट करना है, कुछ भी करना है तो मैं आपकी कमेंट्स देख सकता हूं एंड सुन सकता हूं। तो आपको अगर कोई भी चीज ऐसा लगता है कि सर ये चीज पूछनी है या ये चीज मुझे समझ में नहीं आ रही है या ये चीज मुझे वापस रिविजिट करनी है तो आप डेफिनेटली पूछ सकते हो। ठीक है, चलिए हम अपना सेशन स्टार्ट करते हैं। सर शायद से YouTube पे नहीं दिख रहे हैं हम लोग, मतलब मेरा स्क्रीन नहीं दिख रहा है अभी भी YouTube पे। चलिए गुड आफ्टरनून एवरीवन। सर मुझे 2 मिनट चेक करने दे दीजिए। सर फेस नहीं आ रहा है, एक बार आप फेस के लिए भी देख लीजिए प्लीज।
यूट्यूब में दिख रहा है सर।
सर यूट्यूब में मुझे तो नहीं दिख रहा है सर। एक बार ठीक है चलेगा, आगे बढ़ जाते हैं।
सर आई सीन दैट उसको थोड़ा बड़ा कर सकते हैं क्या? देखो जूम कर सकते हैं क्या?
जूम एक्चुअली बड़ा ही है वो चीज। एक्चुअली जस्ट गिव मी अ मिनट। नहीं सर यस फेस विजिबल नहीं हो रहा है। 2 मिनट हमें टाइम दे दीजिए, हम उसके लिए भी अरेंजमेंट कर लेते हैं। चलिए अभी दिख रहा है फेस। चलिए अभी होपफुली मेरा स्क्रीन एंड मेरा फेस दोनों
It is okay sir. Now it is okay.
Now it is okay. चलिए श्योर। चलिए इसी फर्स्ट ऑफ ऑल मैं इस चीज के रिलेटेड डिस्कशन करने वाला हूँ कि जो हमारा पेपर 12 है इट इज डिवाइडेड इनटू 2 पार्ट्स, अकाउंट्स एंड ऑडिट। अकाउंट्स इज 50 मार्क्स एंड ऑडिट इज 50 मार्क्स। एग्रीड है? तो इन आवर फर्स्ट सेशन वी विल बी ओनली कवरिंग अकाउंट्स वाला पार्ट। तो एक बार मैं अकाउंट्स का थोड़ा सा डिटेल डिस्कशन कर लेता हूँ कि भाई साहब हमारे चैप्टर्स कौन से हमें मालूम है सर, उसके मार्क्स डिस्ट्रीब्यूशन क्या है, किस तरीके से है, मैं उसके बारे में डिस्कस कर लेता हूँ। देखिए यहाँ पे मैंने एवरेज मार्क्स निकाले हैं। एवरेज मार्क्स मैंने लास्ट 10 अटेम्प्ट्स के जो भी क्वेश्चंस पूछे गए थे उसका मैंने ऑन एन एवरेज करके ये मार्क्स निकाले हुए हैं। तो अगर आप देख सकते हो कि जो आपका पहला चैप्टर है शेयर्स एंड डिबेंचर्स, उसके उस चैप्टर में अराउंड 9.5 मार्क्स का पूछा जाता है आपसे क्वेश्चन। सेकंड इज फाइनेंशियल स्टेटमेंट शेड्यूल 3 के हिसाब से अगेन 9.5 मार्क्स। थर्ड इज कैश फ्लो, फोर्थ इज बैंक, इलेक्ट्रिसिटी एंड इंश्योरेंस 3 मार्क्स, 2 मार्क्स, 2 मार्क्स ईच। अकाउंटिंग स्टैंडर्ड 6.5 मार्क्स। एंड जो रिमेनिंग चीज है अराउंड 10 मार्क्स का हमें इन वेरियस चैप्टर से ऑब्जेक्टिव्स पूछे जा सकते हैं। ठीक है, तो ये हमारा बेसिकली मार्क्स का ब्रेकअप होने वाला है। तो इससे पहले जो भी पैटर्न्स है उसमें ये चीज है, अगर आप यहाँ पे देखते हो तो ये जो फर्स्ट 3 चैप्टर्स है, फर्स्ट सेकंड थर्ड, अगर मैं इन तीनों को कवर कर लेता हूं तो अराउंड मेरा 50% कवर हो जाता है एंड विद 10 मार्क्स के ऑब्जेक्टिव्स। तो अगर आप देख सकते हो तो अराउंड 65% हमारा कवर हो जाएगा अगर मैं 1 to 3 टॉपिक को कर लेता हूं। तो सबसे पहले हमारे लिए फोकस यही रहने वाला है। अगर मैं 1 to 3 टॉपिक्स को फर्दर बाइफरकेट करने की कोशिश करता हूं तो जो चैप्टर 1 है वो काफी ज्यादा लेंथी है। अगर आप चैप्टर नंबर 2 एंड चैप्टर नंबर 3 को देख लेते हो तो उनके मार्क्स भी काफी ज्यादा अच्छे हैं और वो चैप्टर्स उतने ज्यादा लेंथी भी नहीं है। ठीक है, तो सबसे पहले मैं आपके चैप्टर 3 से स्टार्ट करने वाला हूं जो है कैश फ्लो। ये कैश फ्लो स्टार्ट करने से पहले मैंने अगर आपको याद रहेगा तो इंस्टीट्यूट ने मॉक टेस्ट सीरीज भी रखी हुई है जिसको आप अपीयर कर सकते हो, आप अपने एमसीक्यू सिलेक्ट कर सकते हो और एक आप प्रैक्टिस सेशन कर सकते हो। जिन्होंने किया है उनको थोड़ा बहुत आइडिया रह गया रहेगा, जिन्होंने नहीं किया मैं उनके लिए एक ब्रीफिंग बता देता हूँ। तो बेसिकली चीज वैसे ही हमारा एग्जाम पेपर नहीं होने वाला है पर उसके लाइक में होने वाला है। तो एक बार मैं उसके थ्रू गो थ्रू करना चाहूंगा। तो अगर आप देखते हो क्वेश्चन नंबर 1 से क्वेश्चन नंबर 4 वो पूरा अकाउंट्स के रिलेटेड पूछने वाले हैं एंड 5 से लेके 8 तक वो पूरा ऑडिट के रिलेटेड पूछने वाले हैं। तो हाल फिलहाल हम अकाउंट्स के पार्ट को ही डिस्कस करने वाले हैं। तो अगर आप देखते हो जो पहला क्वेश्चन है क्वेश्चन 1 वो पूरा रिलेटिंग टू लेसन है। जो क्वेश्चन 2 पूछा जाता है क्वेश्चन 1 का पार्ट भी 4 मार्क्स का पूछा जाएगा, ये सिर्फ आपके अकाउंटिंग स्टैंडर्ड्स के लिए पूछा जाएगा। एंड जो क्वेश्चन नंबर सी है वो आपका ट्रू एंड फॉल्स के रिलेटेड पूछा जाने वाला है। तो अगर आप देख सकते हो जो ट्रू एंड फॉल्स है सर उसमें हमारे पास 50-50% पॉसिबिलिटी रहती है ये मुझे मार्क्स मिलने की या मुझे मार्क्स नहीं मिलने की। ऊपर बात है अकाउंटिंग स्टैंडर्ड्स की एंड जो क्वेश्चन नंबर 1 है ए है वो वेरियस चैप्टर से निकाले हुए क्वेश्चन है। उसके बाद अगर आप देखते हो तो क्वेश्चन 2A 2B एंड 3 ये तीनों एमसीक्यू बेस ही होने वाले हैं बट ये आपके सम के रिलेटेड होने वाला है। जैसे मुझे कैश फ्लो का एक पूरा सम दिया हुआ जाएगा, मुझे बोला हुआ जाएगा कि सर प्लीज प्रोवाइड अस द ऑपरेटिंग प्रॉफिट, ऑपरेटिंग कैश फ्लो, फाइनेंशियल कैश फ्लो या इन्वेस्टिंग एक्टिविटी से जो भी हमें कैश फ्लो मिलने वाला है आप वो मुझे कैलकुलेशन करके बता दीजिए। या आपको बैलेंस शीट का टोटल पूछने वाले हैं या इन सब के रिलेटेड एमसीक्यूज आने वाले हैं। तो इट इज जस्ट लाइक सॉल्विंग द क्वेश्चन एंड लास्ट में वो एक पर्टिकुलर एरिया एक पर्टिकुलर पार्ट का आपसे क्वेश्चन पूछा जाएगा और जिसका आपको आंसर देना है। उसके साथ क्वेश्चन नंबर 4 एंड क्वेश्चन नंबर 8 मिसिंग था जो मुझे लगा डिस्क्रिप्टिव नेचर का होने वाला है। तो अराउंड उसमें हमें टाइप करके करना पड़ेगा अकाउंट्स में भी एंड ऑडिट में भी। चलिए ये थोड़ा सा जब हमारे डिटेल डिस्कशन हो जाता है कि सर अकाउंट्स का मार्क्स का पैटर्न कैसा है एंड अकाउंट्स का एमसीक्यूज का पैटर्न कैसा है, उसके बाद हम चले जाते हैं सबसे पहले आपके चैप्टर पे जो है कैश फ्लो। कैश फ्लो 6.5 मार्क्स का पूछा जाता है जैसे आप नीचे देख सकते हो ऑन एन एवरेज। एंड ये 6.5 मार्क्स में अगर आप देख सकते हो कि पोर्शन काफी इजी है, से हमें बाइफरकेशन करना है कि हम किस तरीके से तीनों में बाइफरकेट करने वाले थे। तीन ही एक्टिविटी से और कोई एक्टिविटी है नहीं। चलिए जंप कर लेते हैं उस वाले पार्ट पे डायरेक्टली। ठीक है, चलिए कैश फ्लो स्टेटमेंट। See, cash flow statement is nothing but and cash ledger. The cash ledger is bifurcated into 3 parts. One is operating activity, the financing activity, and the third wala is investing activity. So you have to bifurcate your cash received as well as your cash payments into 3 parts: operating, financing, and investing activities. ठीक है? See, the thing which we are going through is the main reason is भाई साहब हमें बेसिक भी समझ में आ जाए। जब तक हमें बेसिक समझ में नहीं आता तो हमें प्रॉब्लम थोड़ा बहुत होने वाला है। तो कैश फ्लो कुछ नहीं है, आपके जो कैश लेजर है उसका ही मॉडिफाइड वर्जन है, बस उसको थोड़ा सा क्लासिफाई करने की कोशिश की गई है इन्होंने। ठीक है, चलिए मैं आ जाता हूं टाइप ऑफ कैश फ्लो समझने के लिए। बेसिकली 3 टाइप के कैश फ्लोस होने वाले, अगर आप कभी भी यहाँ पे देख सकते हो तो मैं आपको यहाँ पे हाईलाइट कर देता हूँ. कैश फ्लो फ्रॉम ऑपरेटिंग एक्टिविटी, कैश फ्लो फ्रॉम फाइनेंसिंग एक्टिविटी, कैश फ्लो फ्रॉम इन्वेस्टिंग एक्टिविटी. Operating activity is nothing but your business. Financing is nothing but भाई साहब, I've taken any loan, I've taken any, I have issued shares, I've issued debentures, I've issued preference shares. उसके कारण अगर मैं कोई भी फाइनेंस रेज कर रहा हूँ तो उस केसेस में उसको हम बोलने वाले हैं फाइनेंसिंग एक्टिविटी. जो भी आपने फाइनेंस रेज किया उसको अगर आप इन्वेस्ट हो फिक्स एसेट्स में तो उसको ये लोग भाई साहब बोलते हैं इन्वेस्टिंग एक्टिविटीज. तो बेसिकली 3 पार्ट्स में बाइफर्केशन ये किया हुआ है. एग्रीड है. अगर आपको याद आता है मैं आपको एक चीज बता देता हूँ कि पहला कौन सा है, दूसरा कौन सा है, थर्ड कौन सा पूछ जाता है. सबसे पहले क्या होता है, कैपिटली इन्वेस्ट किया है बिजनेस में, इससे हमें असेट्स मिलते हैं. असेट्स को जब हम एम्प्लॉय करते हैं तो हमें प्रॉफिट मिलता है. तो इसलिए जो इनका फ्लो है, सबसे पहले ऑपरेटिंग एक्टिविटी, सेकेंड इज इन्वेस्टिंग एक्टिविटी एंड द लास्ट वन इज फाइनेंसिंग एक्टिविटी. एग्री? तो चलिए सर, we should start with further bifurcation. Cash received from sales of goods and rendering of services. Three areas: operating, financing, investing. So which activity? Operating, financing, investing. So yes, this is an operating activity. Receive cash from royalty, fees, commission and other revenue. Again, operating activity. Cash payment for acquisition of fixed assets, including intangible assets. So, sir, this is not an operating activity. We are investing, means it will be our investing activity. Okay? Operating activity means income by way of business. Cash flow from financing activity is nothing but your asset sides, and cash flow from investing activity is nothing but your liability side. So if there is increase or decrease in assets, normally it will be termed as investing activity. If there is increase or decrease in your long-term liabilities or your equity share capital or a share capital, it will be termed as your financing activity. Apart from 1 and 2, everything will be termed as operating activity. So cash proceeds from issue of shares or other, it is affecting my liability side. So we will term as financing activity. Again, cash received from disposal of fixed asset, it is affecting my asset side. So we will term this as investing activity. See, simple sa logic hai. Asset side will be termed as investing activity, liability side will be termed as financing activity. Long term liability side, share capital plus long term liability, we will term this as financial activities. Please keep this thing in mind. Cash payment to owners to acquire or redeem the enterprise shares, again investing activity. Cash repayment on amount of borrowed. Just give me a minute. I think we are facing some noise break and all. Chalo, now I think there will not be any problem relating to voice. Sorry. Cash repayment of amount borrowed. Sir, we will term this as liability side. Yes. So liability means investing activity again. cash payment to and on behalf of employees. Cash payment to and on behalf of employees means salary, sir. Salary. Again, operating activity. Loans and advances given to the following and interest earned on them. See, loans and advances given to the following and interest earned on them. So we should consider what is the nature of interest. Either interest can be my operating activity or financing activity or investing activity. So to suppliers, to employees, to its subsidiary companies. Chalo, voice is still breaking, kya? Hello? Still we are facing the same issue of voice, kya? Chalo. Chalo, we are not facing any issue, na? And there will be some lag. We can't help it. There will be some lag. Chali. So basically cash flow will be bifurcated. Cash flow from operating activities bifurcated into two parts. One is direct method, another is indirect method. In case of cash flow from investing and cash flow from financing, there will be only one method, that is indirect method. In case of cash flow from operating activity, we have two methods. One is direct method, one is indirect method. In case of direct method, we will prepare, it is just like an cash ledger account, and the cash paid will be my cash inflow / outflow from operating activity. We will discuss the format as well. But in case of indirect method, we will use net profit to find out the net cash flow from operating activity. See, please see the format. Our indirect cash flow is asked in the exam. Cash flow from cash flow statement for the period ended. Cash flow from operating activities, cash received from the customers, less cash paid to suppliers and employees and other expenses, cash generated from operating activity, less income tax paid, cash flow from operating activity before extraordinary items, add and less any proceeds or any differences because of extraordinary items or case settlements. This will be your net cash flow from operating activity. So basically it will be my cash ledger account. All the credit items will be the positive one. All the debit items will be the negative one. And now we are jumping to the indirect method. So cash flow from operating activity in case of indirect method. What should we do now? See, the profit should be before tax and extraordinary item. So whenever we are getting an indirect method relating to operating activity, first we should find the net profit, and net profit should be before any tax and extraordinary items. After that, we should adjust for non-current and non-operating items charged to profit and loss account. See, depreciation is a non-cash item. Interest paid, loss on sale of fixed assets and investments are non-operating items because they will be classified in investing and financing activities. Sorry, further. Adjustment for non-current and non-operating items, same. This was for income and this was for expenses, this was for income. So it will be operating profit before working capital adjustments. Working capital, if there is an increase and decrease, whether there is an increase and decrease, we will adjust accordingly. So we will do this thing with the help of some sums. With the help of some sums. We will receive cash generated from operating activity less income tax paid. See, there won't be any provision or anything else. It is actual payment. Provision should not be considered, actual payment should be considered. Then we will get net cash flow from operating activity. The second one will be cash flow from investing activities, proceeds from the sale of investments, purchase of fixed assets, dividend received, and all. Cash flow from financing activity will be liabilities, payment of dividend, payment of interest, fluctuation, and I can say fluctuation of long-term borrowings and all will be covered in this part. So many a time there is a question, sir, if we have paid interest and if we received interest, see, we will consider chalo A wala part. Interest paid and second is interest received. Which should be treated as an operating activity and which should be treated as an financing activity. Which should be treated as an financing activity and which should be treated as an investing activity. We are facing this problem. Many students are facing this kind of problem. See, in case of interest pay, if you're paying interest, means we have taken any loan, on which we are paying interest. If we are receiving interest, means I have given you loan. In the previous case, loan is taken, and in case of B, loan is provided to some person or some entity. Since loan taken is classified in liability side, it will be termed as financing activity, and loan given will be shown on asset side, which we can treat him as investing activity. So any interest which is paid should be treated as an financing activity. Any interest which is received should be treated as an investing activity. Chali. From problem number 2, we will start our sums. So problem number 2, we will calculate the net profit calculation as well as increase or decrease in working capital. We will understand these two things. All the questions are of relating to past year questions, so you will get a hang of that as well. Sorry, problem 2. The following are the relevant items for the balance sheet of LM Limited. December 13, 4 marks question. Goodwill, profit and loss account, general reserve, inventory, debtors, prepaid expenses, creditors, provision for taxation, provision for doubtful debts. Depreciation amounting to 1,42,000 and profit on sale of machinery amounted to rupees 21,000 appeared in the profit and loss account for the year end 31st of March 2013. During the year 2013, 1 lakh was paid as income tax. You are required to calculate the net cash flow from operating activity for the year end. See, so first we should calculate net profit before tax. Net profit before tax should be calculated. Chali. My opening balance of profit and loss account was 4,15,000 and my closing balance was 6,25,000. My opening is 4,15,000 and my closing is 6,25,000. So I can say that my balancing figure is, my opening is 4,15,000 and my closing is 6,25,000. The movement between opening and closing will be because of current year's net profit. Agreed? So we should start our calculations then. So profit and loss account. Opening balance. My opening balance is 4,15,000. and my closing balance is 6,25,000. Apart from profit and loss account, we have one more account, which is general ledger account. See, general ledger and profit and loss account are reflected in reserves and surplus. So in case of general reserve, their opening balance was 3,25,000 and their closing balance was 3,75,000. Opening balance was 3,25,000 and closing balance was 3,75,000. So there is a movement in general reserve as well. The movement will be only because of transfer of profit from profit and loss account to general reserve. So we can say that, sir, by profit and loss account 50,000, and we can write here general reserve 50,000. Agreed? Is there any dividend and all? After reading the question, we have not paid any dividend or anything else. So the balancing figure in our case, will be profit during the year, which will be 6,25,000 plus 50,000 minus 4,15,000, which will be 2,60,000. So my profit before tax will be 2,60,000. No, sir, your profit before tax will not be 60,000. Your profit after tax is 2,60,000. We have to take the adjustment of income tax as well. See, the provision for income taxes opening was 1,05,000 and closing was 1,55,000. So I will make one more account, provision for tax. The opening is 1,05,000. Opening is 1 lakh and closing is 1,55,000. Also, in the adjustments, you can see during the year 2012-13, rupees 1 lakh was paid as income tax. Rupees 1 lakh was paid as income tax. So I can say we have paid 1 lakh rupees as income tax. Income tax account debit to cash account. The balancing figure in this case will be my provision for tax or the provision which I have made during the year. So 1,55,000 minus 1,05,000 will be 1,50,000. So I will say net profit after tax add provision for tax made during the year is 1,50,000. So my net profit after tax or profit before tax will be 2,60,000 plus 1,15,000. It will be 4,10,000. See, this was the main adjustment in this sum. And we will also see the increase and decrease in working capital. So we will also see the increase and decrease in working capital. So inventory, debtors, prepaid and creditors, they will be covered under working capital. See, debtors and inventory both are my assets current assets, prepaid expenses, and creditors. Both are my liabilities, current liabilities. So in case of asset, we will consider this as a blockage, and in case of liability, we will consider them as a loan. Means, see, 2,35,000 was my loan for the opening. At the time of opening balance sheet, my loan was 2,35,000, which is increased to 2,70,000. If there is increase in loan, means there is inflow of cash. If my loan was 2,35,000, which is increased to 2,70,000, means there is inflow of cash. So we will say increase in creditors, which amounts to 35,000, will have a positive balance because we will consider creditors as a loan. So if the amount of loan increases, the inflow also increases. So 35,000 will have a positive sign. Sorry. Again, second, prepaid. There is decrease in prepaid expenses. Decrease in prepaid expenses. And amount is 3,000. So I can say my loan was 18,000. Now the closing balance is 15,000. So there is decrease in loan by 3,000. If there is decrease in loan, means you have repaid the amount, means outflow of cash. So we will say this is negative balance. This will have negative balance. Actually, we will write here also. The third point, inventory and debtors. They are like my asset. We will consider this money as my blockage. We will consider the money as my blockage. So my inventory was 4,15,000, which increased to 5,10,000. So I will say increase in inventory from 4,15,000 to 5,10,000. So 95,000 has been increased. My blockage has been increased from 4,15,000 to 5,10,000. My money is blocked in inventory and my blockage has been increased by 95,000. If your blockage increased, means you have invested more money, means there is outflow of cash. So we will put negative sign here again. So 95,000 negative. And the last but not the least, debtors. My debtors balance was 3,45,000. My debtors balance was 3,45,000. My blockage was 3,45,000, which reduced to 3,22,000. From 3,45,000 to 3,22,000. My blockage is reduced by 23,000. Means there is inflow of cash. Decrease in debtors will have positive balance. So if you are not able to understand this concept, please let me know. Are you all comfortable with this part? If you are facing any query, see, in cash flow, the major two issues which students are facing is, one is to calculate net profit, and the second thing is the signs of working capital, whether it will be a positive sign or a negative sign while calculations. So don't worry, we will not do the complete sum. This was a relevant extract of the sum. So after question number 2, we will go to question number 3. Question number 3 was asked in June 2014 for 10 marks. The only part which we want to understand is amortization of capital grant and receipt of grant for capital project. See, receipt of grant for capital project should be treated as your financing activity. So 28,000 should be 28 should be transferred to your financing activity. And you have received 28,000 free, huh? It is for free. You have not paid anything. It is just like a donation. You have received a donation of 28,000. So 28,000 will be considered as my financing activity. Out of this 28,000, you have credited your profit and loss account by 12,000. You have credited your profit and loss account by 12,000. But sir, government grant or my grant will be treated as my financing activity. So it should not be reflected in operating activity. It should not be reflected in my operating activity. Since amortization of grant is credited to P&L, to reverse the effect, we should debit the P&L. Debiting the P&L means decreasing. We should decrease the net profit by 12. So these are the two adjustments. One is I have received 28,000. Since 28,000 is a government grant, it should be treated as a financing activity. It should not be treated as an operating activity. Neither it is an investing activity. Out of this 28,000, 12,000 is credited to profit and loss account. Since 12,000 is not an operating activity, we should eliminate the same. Means we should debit the same. If you have credited, we should debit the same. Debit the same means we should decrease it from profit and loss account. Means 12,000 will be decreased from profit and loss account. So we should move further. Before moving to problem number 4, we will understand few things relating to sale of investment or assets at profit or loss. See, investment cost is 8,000, sold for a profit of 2,500. Investment cost is 8,000, sold for a profit of 2,500. Simple mathematical formula. So what is my simple mathematical formula? See, cost plus profit is selling price, and cost less loss is selling price. Profit and loss is reflected in my profit and loss account, and selling price should be reflected in my cash flow. Should be reflected in my cash flow. Yes, I will share all the questions. No, don't worry. So the first question is investment costing 8,000, sold for a profit of 2,500. Investment costing 8,000 was sold for a profit of 10,000. So plus, and this is equals to, was sold for a profit of 2,500. Means we have sold the investment for 10,500. So my investing activity will be affected by 10,500, and my operating activity will be affected by 2,500. Since we have sold our investment, we will receive 10,500. So it will be termed as a positive balance. And profit on sale of investment is not termed as an investing activity. Since profit is credited to profit and loss account, we should reverse the impact. Means we will put a negative sign. It's a simple logic. If you're crediting the profit and loss account, which should not be credited, you should do the reverse effect. Means we should debit the profit and loss account. Debiting the profit and loss account means subtracting from the net profit. Crediting the profit and loss account means adding to the net profit. So it will be positive 10,500 should show a positive balance in my investing activity. 2,500 should be subtracted from my operating activity. Same way, second question. Investment costing 8,000 sold for a loss of 1,000. Investment costing 8,000 was sold for a loss of 1,000. Means we have received only 7,000. We have received only 7,000. 7,000 should be reflected in my investing activity. Since we have received this, it will have a positive balance. 1,000 is reflected in my profit and loss account debit side. This was reflected on my credit side. This is reflected on my debit side. To reverse the effect, I should credit it. Means I should add 1,000 to my net profit account. Agreed? So third wala bola. Salary paid during the year is 25,000. Outstanding salary during the year was 4,000. Means the salary paid is 25,000 and outstanding during the year is 4,000. Salary paid is 25,000. So my cash flow should be affected by 25,000 only. So we should subtract only 25,000. We should subtract only 25,000. This is in case of direct method. Huh? This calculation will be relevant in case of direct method. And in case of provision for tax, we have understood the same in our problem number 2. Just hold on a second. So prepaid expenses are current. Okay. My bad. Prepaid expenses are current assets, not current liabilities. My bad. There was a slight mistake. So prepaid expenses are my current assets, not my current liabilities. Small. So my blockage is being decreased from 18,000 to 15,000. Since it is my asset, we will term this as our blockage, and this will be termed as a loan from 18,000 to 15,000. Since my blockage is reduced by 3,000. It will have a positive impact. 3,000 will be positive. 35,000 will be positive. Same goes for 3,000 as well. Yeah, my mistake. So all the 5 points are being covered here. After problem 3, we will jump to problem number 4. See, all the important points are written here. Huh? See, the remaining thing is, sir, general reserve, there is a movement in general reserve, sir, there is a movement in profit and loss account, there is a movement in creditors, bills payable, income tax, and so on, which you can understand now. So we will be only talking about the relevant extract of particular sum. In case of problem number 4, we will calculate the net profit and loss account. One more question, sir. Amortization of expenses is debited to profit and loss account. see, I've received a grant of 28,000. I have received a grant of 28,000. Yeah, 28K, whatever. So 28 is my income, not my expense. 28 is my income, not my expense. So if we amortize our income, it will be credited to profit and loss account. Amortization of expenses is debited to profit and loss account. Amortization of income is credited to profit and loss account. Since government has given you 28,000, grant means just like a donation which you have received without paying anything. So 28,000 is your income. So amortization of income should be credited to profit and loss account. In case of amortization of expense, they will be debited to profit and loss account. I hope I'm clear on this now. चलिए, problem number 4. So relevant balance sheet account of Aarti Limited. General reserve, profit and loss account, creditors, bills payable, income tax payable, proposed dividend, stock, debtors, bills receivable, prepaid, expenses. Other information is during the year 13-14, one old plant machinery costing 6,45,000, WTV is 3,92,000 was sold for 3,68,000, and some investments are sold at a profit of 15,000. See, in this case, in point number 1, we will use the same logic. So we will use the same logic. Cost plus profit is equals to selling price. Profit should be reflected in my operating activity, and selling price is reflected in my cash, should be reflected in my cash flow. So in case of problem number 4, general reserve, there is a movement. If you will see from 46 to 49, general reserve is increased by 3.5. General reserve is increased by 3.5 lakhs. In case of profit and loss account is increased by 6 lakhs. Profit and loss account is increased by 6 lakhs. So there is a total movement of 9.5 lakhs. So there is a total movement of 9.5 lakhs. Just give me a minute. ठीक है, तो सर my current year का profit and loss account, in case of problem number 4, we were working on problem number 4. So in case of problem number 4, there is increase in general reserve by 3.5 lakhs, and there is increase in profit and loss account by 6 lakhs. So you can either make an account or you can do directly. Either way around is feasible and acceptable by the institution. I will go with a long cut way. My opening was 41 and my closing was 47. My opening was 46 and my closing was 49.5. The increase in general reserve is only because of transfer from profit and loss account. So I will write here 3.5 lakh is because of profit and loss account. Yeah, I will share the questions. Don't worry. The movement will be only because of profit and loss account 3.5 lakhs, and if we will say here profit and general reserve account 3.5 lakhs. Agreed? Please also see one more thing. So this is done, this is done. There is proposed dividend as well. There is proposed dividend as well. So proposed dividend during the year is 18,000. Proposed dividend during the year is 18,000. So you can see profit before tax, the movement of profit and loss account. See, there will be profit before tax, assume it to be 100. We will pay tax of 30. A profit after tax will be 70. Out of this 70,000, I will pay 20,000 as my proposed dividend. Take an example of 20,000. The remaining 50,000 will be reflected in my balance sheet. So this 47,000 is after adjustment, after deduction of proposed dividend. So we should add back the same. So I will say ki proposed dividend is 18 lakh, 18,000 and so on. The balancing figure will be my profit and loss account ka balance. So 41. So it will be 47 plus 18 plus 3.5 less 41. 27.5 will be my profit and will be my current year profit. Hope this is clear. So apart, we will do one more thing. We will do again working capital calculations. Creditor is my working capital, bills payable is my working capital, stock is my working capital, debtor is my working capital, receivable is my working capital, prepaid expense is my working capital. Creditors, bills payable are my liabilities, stock, debtors, receivable and prepaid expenses are my assets. So assets should be treated as a blockage and liability should be treated as a loan. So in case of creditors, my loan was 25,000, which is decreased to 23,500, 23.5. Decrease in loan means repayment of loan. So we will have a negative sign. In case of bills payable, means we will consider this as a loan. My loan was 3, which is increased to 4. If there is increase in loan, means there is inflow of cash. We will give a positive sign to this. Again, stock. We will consider stock, debtors, bills receivable as well as prepaid expenses as a blockage. So increase in blockage means more wastage of money, means we will consider this as a cash outflow. Decrease in blockage means release of cash. We will consider this as my cash inflow. From 30, my blockage has been decreased to 27. We can say this will be termed as a positive balance. We will consider this as an inflow of cash. My blockage of 22 is increased to 26, means there is outflow of cash. We will give negative sign. The third one part, 4. The blockage of 4 is decreased to 2.5. There is inflow of cash, positive. My blockage of 1 is increased to 2.4. More blockage means outflow of cash, means negative balance. Hope that we are cleared with all this parts. Yes. So, see, all the main crux are written here, huh? So in 3 hours, we have to cover all the portions. So I have covered all the main crux here. The remaining thing and the remaining questions you can solve it by yourself. It will not make a much difference. You can achieve easily. So the problem number 5, building construction. will be the part which we want to understand, which is point number 5. Building under construction was not subject to any depreciation, and land and building there is increased by 2 lakhs. The point says building under construction was not subject to any depreciation, and the movement is from last year to current year, there is a positive movement. My building under construction is increased by 2 lakh. Means I've invested 2 lakhs in my investing activity. So I will say in my investing activity, building under construction, 2 lakh and 2 lakh with a negative balance. 2 lakh with a negative balance. Sorry. After problem number 5, we will directly jump to problem number 8. So if any of you are facing any kind of query, or if you are not able to understand any part, just let me know. I'm watching all your comments. So, problem number 8. So in case of problem number 8, the adjustment of dividend is the most important thing. So see, EWM India Limited has the following balances as well: PPE less depreciation and net PPE, stock, bank balance, creditors, bills payable, capital, share capital of rupees 100 each, which is 2,85,000. The company will pay a free of tax dividend of 10%. The rate of tax being 25%. The company will pay a free of tax dividend, free of tax, please, of 10%. The rate of tax is 25%. Sir, how should we calculate this? First of all, we will calculate the dividend component, which is the most easiest thing to calculate. In case of problem number 8, dividend is calculated on share capital. Share capital is 2,85,000. And my percent of dividend percentage is 10%. So my dividend will be 28,500. My dividend is 28,500. But what they are saying is this 28,500 should be after subtracting of tax. So 28,000 should be tax free. 28,000 should be tax free. Means after paying all the taxes, 28,500 should be received by your shareholders. Means if the dividend was 100 and if you have paid tax 25, the remaining 75 should be received by your investors. So I should explain this once more. Sorry, sir. Assume that my dividend is 100. I have to pay tax of 25% on dividend. 100 ka 25% is 25 rupees. So after paying tax, this is my gross dividend. This is my tax. And this is my net dividend, which is 75. So net dividend is the amount which should be received by investors. So in our present case, that amount is 28,500. So 28,500 is the amount which should be received by the investors, is the tax-free amount, or we can say that this amount is tax-free. So dividend is calculated on, this 25 is calculated on 100. So 100 into 25% was 25 rupees. And 75 amounts to 28,500. To calculate the amount of tax which should be paid on dividend, we have to use cross multiplication. We have to use the cross multiplication. The balancing figure will be the amount of dividend tax paid by the company, which will be 28,500 multiplied by 25%, multiplied by 25 and divided by 75, which comes to 9,500. So company will pay, which comes to 9,500. So company will pay dividend of rupees 28,500, plus company will also pay dividend tax, dividend distribution tax of rupees 9,500. This was the most important adjustment in that sum. The remaining part is easy. So hope that we are comfortable with this part. So now comes to problem number 9. In case of problem number 9, this is the relevant extract. This is not the whole sum, but this is the important extract of the sum. This is the important extract of the sum. Equity share capital on March 16 is 20 lakhs. On March 15 was 15 lakhs. So there is a positive movement in equity share capital by 5 lakhs. So there is a positive movement in equity share capital by 5 lakhs. So I will write 3 things. One is operating, financing, and investing activity. This is problem number 9. Operating activity, investing activity. Chalo, I will directly say financing activity, sir. In case of financing activity, issue of share capital is 5 lakhs. Issue of share capital is 5 lakhs. Preference shares of rupees 100 each, rupees 50 paid up. The opening was 5 lakhs and the closing is 0. Please read this thing as well. During the year, company got income from investment 80,000. Company has paid 1,50,000 as equity dividend and 76,000 as preferential dividend. The company redeemed the preference shares at a premium of 5% after making a successful call of rupees 50 per share to make the shares fully paid. See, in case of chapter number 1, we will also read this thing as well. If you want to redeem preference shares, only fully paid up preference shares are redeemable. Partly paid up preference shares are not redeemable. So in case of preference shares, my paid up is 50 and my issued is 100. My paid up is 50 and my face value is 100. So First, we will demand for the 50 rupees. First, we will demand for 50 rupees. Sir, number of shares, number of preference shares. So 50,000, 5 lakh is my paid up preference shares capital. Paid up amount is 50 rupees, which comes to 10,000, which comes to 10,000 preference shares. 10,000 preference shares, face value rupees 100 each, rupees 50 paid up. 10,000 into 50 comes to 5 lakh rupees. So first, amount called up and received from preference share. Amount called up and received from preference shares is 5 lakh rupees. It is 10,000 into rupees 50 each. After that, there is a redemption of preference shares. There is redemption of preference shares. So now the total amount of preference shares is 5 lakh was the opening, plus we have asked for another 5 lakhs. So my total amount of redemption is 10 lakh rupees. Redemption of preference shares is 10 lakh rupees. Also, they are redeemed at 5% premium. They are redeemed at 5% premium. So we should pay 5% extra. Premium on redemption will be 10 lakh into 5%, which will be 50,000. Which will be 50,000. Which will be, sir, 50,000. This multiplied by 5% will be 50,000. Agreed? So in case of your financial activity, we can make mistake here and here. These are the two gray areas where we are institute will pull our leg. Huh? So this 5, this 5 and this 5, 50,000. The second movement is in case of reserves and surplus. Balance of profit 3 lakh. Now it is 4 lakh 50. 4 lakh 50. Now it is 3 lakh rupees. General reserve is from 4 lakh. It's 2 lakh rupees. Capital redemption reserve is 5 lakh rupees. Securities premium is 20,000 was the opening balance. Now it is 0. Sir, क्या हुआ? What should we do now, sir? We will go with some basics. Capital redemption reserve is required when preference shares are redeemed. The amount which should be transferred to capital redemption reserve is face value of preference shares less equity share capital issued. The balance amount should be transferred to capital redemption reserve. The balance amount should be transferred to capital redemption reserve. So CRR is required in case of redemption of preference shares. The amount is determined by using the following formula: face value of preference shares less equity shares issued. The balance amount should be transferred to capital redemption reserve. In my current case, face value of preference shares redeemed is 10 lakh rupees. Equity shares issued is 5 lakh rupees. The amount for which CRR should be created is 5 lakhs. CRR or capital redemption reserve is created out of free reserves. CRR is created out of free reserves. Chalo. So now see the movement. Chalo. We will prepare few accounts. One will be profit and loss account. One will be general reserve account. The third one will be capital redemption reserve account, and the fourth one will be securities premium account. So my profit and account opening balance is 4,50,000 and my closing balance is 3 lakh rupees. Opening is 4,50,000 and closing is 3 lakh rupees. In case of general reserve, opening is 4 lakh, closing is 2 lakhs. In case of capital CRR, opening was 0, closing is 5 lakh rupees. In case of securities premium, opening was 20,000, closing is 0. Chalo. The reason for decrease in general reserve? Yes, sir. It is because of CRR only. So out of 4 lakhs, 2 lakh is used for creating CRR. Out of this 4 lakhs, 2 lakhs is used for creating CRR. Chalo. Opening, closing. Out of this 4 lakhs, 2 lakhs is used for creation of CRR. So we can write here CRR is 2 lakhs, which is my balancing figure as well. So I can say we can write directly general reserve 2 lakhs. So this account is closed now. So opening 0, 2 lakh is created by using general reserve. The balance will be created using profit and loss account only. So 3 lakh will be my balancing figure. And we will write here CRR is 3 lakh rupees. Agreed? Chalo. So this is done, and this is also done. During the year, company has received this. The company has paid 1,50,000 as equity share dividend and 76,000 as preference shares dividend. So it will be reflected in my financing activity as well as in my profit and loss account. Equity share dividend, preference shares dividend. Amount is 1,50,000 and 76,000. 1,50,000 and 76,000. So I will write here dividend is total comes to 2,26,000. So this wala part is done. This wala part is also done. The company redeemed the preferences. We have completed this part, and this will be shown. This will be shown afterwards, not in our current profit and loss account. So my balancing figure. Will be my profit. My profit during the current year. This will be my profit after tax. We have to make the adjustments for income tax and all. Also, see, in case of securities premium, opening was 20,000 and closing is 0. Opening is 20,000 and closing is 0. I will provide one more account which will be premium on redemption of preference shares. Premium on redemption of preference shares, which was 50,000. Yes, if we correctly remember, which is kitna 50,000. So we will say premium on redemption of preference shares is 50,000. Out of this 50,000, 20,000 is used by setting of its securities premium. So I will write preference on redemption of preference shares 20,000. Here I will write securities premium 20,000. And the balance amount, if any, should be transferred to profit and loss account. So profit and loss account 30,000. So premium on preference shares is 50,000. 20,000 is transferred to securities premium, and the remaining amount is transferred to profit and loss account. So this was one of the good stuff. So we can conclude on cash flow now, and we will start with the second chapter. We will start with our second chapter, which is preparation of schedule 2. So in case of schedule 2, remember these few sections. These sections are more important. As per section 129 of the Companies Act, at the annual general meeting, the board of directors of the company should lay financial statement before the company. One is balance sheet, the second is profit and loss account, third is cash flow, change in equity, and notes. So please remember section 129. As per section 129, we should disclose all the following things. If special act is applicable, section 3 is not applicable. In case of insurance, banking, and company engage in generation and supply of electricity, schedule 3 is not applicable. Apart from the companies above, section 3 is applicable to all the other companies. If you are covered under special act like insurance, electricity, and banking, in these three cases, schedule 3 is not applicable. So insurance, banking, and electricity, schedule 3 is not applicable. Part 1 of schedule 3 is known as balance sheet. Part 2 of schedule 3 is known as statement of profit and loss account. See, if we communicate that part, you should prepare part 1 of schedule 3. Part 1 of schedule 3 is nothing but balance sheet. Part 2 of schedule 3 is nothing but your profit and loss account. Actually, balance sheet format as per schedule 3. Name of the company, equity share capital, equity and liability में shareholders fund. Shareholder fund is further bifurcated into share capital, reserves and surplus, money received against share warrants. Second is share application money pending for allotment. Third is non-current liabilities. Fourth is current liabilities. Non-current liabilities is further bifurcated into long-term borrowings, deferred tax liabilities, other long-term liabilities, and long-term provision. Current liabilities is long-term, short-term, long-term borrowing, short-term borrowing. Trade payables, outstanding due to micro enterprise and small enterprise and others. Other long-term, other current liabilities. Long-term provision, short-term provision. See, share capital, reserves and surplus, money received against share warrants. Second is share application money pending for allotment. Non-current liabilities will be further bifurcated into long-term liability, short-term liability. Long-term liability, this is short-term liability. Deferred tax liability, trade payables. Trade payables are further bifurcated into two parts: outstanding to micro and small, and outstanding to other than micros and small. Other long-term liabilities, other current liabilities. Long-term provisions, short-term provisions. So in case of assets, property, plant and equipment is bifurcated into tangible, intangible, capital WIP, asset, intangible assets under development. So tangible, capital WIP, intangible under development. Non-current assets, deferred tax assets, long-term loans and other non-current assets. Current investments, non-current investments. Inventory, trade, cash and cash equivalents, long-term loans and advances, short-term loans and advances, other non-current assets, other current assets. So, definition of current assets and current liabilities. Current liability is expected to be settled in the company's normal operating cycle or is held primarily for the purpose of trading or is settled within 12 months, then it is current liability. Non-current liability, the liability which is current liability, the liability which is not a current liability is a non-current liability. Best definition. Liability other than current liabilities shall be classified as non-current liabilities. So current liability is expected to be settled. Please, is expected to be settled in normal working cycle, is held primarily to be trade and is due to be settled within 12 months. General, so it is termed as current liabilities. So current assets is normal operating cycle being held for trade, being held for trade within 12 months. Cash and cash equivalent is the additional part. Please read the following point. Unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the reporting period. Cash and cash equivalent. See, what is the meaning of this? I have a subsidiary in USA. That subsidiary has a cash of $1 lakh. But that $1 lakh can't be used for 15 months. $1 lakh can't be used for 15 months. If that $1 lakh can't be used for 15 months, we will term them as non-current assets. If that $1 lakh can be used within 12 months, if that $1 lakh can't be used for 12 months, more than 12 months, so we will term them as non-current assets. If they are capable of using for 12 months, then we will term them as current assets. So if I have made an investment in any of my US subsidiary and they have earned $1 lakh, and if I can use that $1 lakh, there is no restriction in using that $1 lakh. Or if the restriction is less than 12 months, so if I have $1 lakh can be used at any time means no restriction, or the restriction is less than 12 months, we will term this cash and cash equivalent as current assets. Otherwise, they will be termed as non-current assets. Agreed? चलो अब आ जाते हैं शेयर कैपिटल. So शेयर कैपिटल is shareholders fund में शेयर कैपिटल A part 1A. For each class of share capital, for each class of share means equity and preference, also different class of preference has to be treated separately. So means what? Sir? See, I have one equity share. Face value is 100. I have another equity share. This is equity share A. This is equity share B. Face value is 50. I have 18% preference shares. I have 12% preference shares. For each such class, this is class A, class B, class C, class D. For each such class, we should do and prepare the reconciliation statement as well as all these things. For each class, for this face value of 100, we will say authorized capital, issued capital, subscribed, called up, paid up, calls and arrears. We will also do reconciliation for all such cases. We will do for 100, we will do for 50, we will do for 18%, we will do for 20%. So the terms which are used are authorized capital, issued capital, subscribed capital, called up capital, paid up capital, and calls and arrears. Authorized is the maximum limit. Is the maximum limit of number of shares the company is eligible to issue. The company is eligible to issue. So maximum, assume maximum I can issue 1 lakh shares. So this is my maximum limit. Authorized capital is nothing but your maximum limit. Issued capital is nothing but your shares. You have offered shares. Out of this 1 lakh, I've offered 90,000 for sale. I've offered 90,000 for sale. Out of this 90,000, shareholders has accepted only 80,000. This is termed as subscribed capital or offer accepted. So see, just like a pen and just like in computer and all, we also sell shares. So if I'm trying to sell 90,000 shares, people has only purchased 80,000 shares. So the selling part is known as issued capital, and the people who have purchased our shares will be termed as subscribed capital. So one is offer accept shares offered, and another is shares accepted. The fourth wala part is money asked for. Yeah, out of my face value is 10 rupees. My face value is 10 rupees. But don't give me 10 rupees now. Out of this 10 rupees, only give me 6 rupees. Out of this 10 rupees, only give me 6 rupees. Okay? So yeah, out of this 10 rupees, give me 5 rupees. So my authorized limit is 10 lakhs. I have asked, I tried to sell 90,000 shares, but I have received an offer only for 80,000 shares. 80,000 shares, my face value is 10 rupees, but out of this 10 rupees, I'm only asking for 5 rupees. Means 80,000 shares into 5 rupees means I'm only asking for 4 lakh rupees. From 4 lakh, I've received 3 lakh. So 3 lakh is known as my paid up capital. And 1 lakh, which is yet to be received, is known as calls and arrears. So for authorized capital, what you should present is authorized capital, face value, number of shares to be issued. For authorized, for issued, for subscribed, for paid up, for called up. Number of shares issued, subscribed, paid up, and subscribed but not called up. See, I have explained all these terms in a very layman language. Face value should be disclosed for each shares. Reconciliation should be done for each class of shares. So we had 4 class of shares in our example. Equity with a face value of 100, equity with a face value of 50, preference shares with 18%, 12% preference shares. Right preferences and restriction attached to shares. For equity shares, such right, preferences and restriction may be with voting rights or with differential voting right as to dividend voting and others as per company issue of share capital with differential voting rules 2001. They are explaining the bifurcation. Means in my case, I have a different voting right from Mr. B. My class of shares are different. Mr. B's class of shares are different on the basis of voting. So my class of shares will be class A, their class of shares will be class B. For each such class, there will be reconciliation, there will be authorized, there will be issued, there will be subscribed, and so on. Shares held. Sixth point is more important. Shares held in the company by its holding company or by its ultimate holding company, including shares held by or by subsidiaries or associate of the holding company or the ultimate holding company in aggregate should be disclosed. So shares held by holding company or the ultimate holding company should be disclosed. List of shareholders holding more than 5% of the shares at the balance sheet date should be disclosed separately. So my holding company as well as my ultimate holding company's name should be disclosed. Any shareholder who is holding more than 5% of shares, 5% of shares should be, their name should also be disclosed. Shares reserved for issued under options, contract commitments for the sale of shares, this investment, including the term and amount, should also be disclosed. This is again an important part. For the period of 5 years, immediately preceding the date at which the balance sheet is prepared, aggregate number and class of shares allotted as fully paid up and up pursuant to the contracts without payment being received in cash. Means shares issued without consideration in cash. Shares issued without consideration in cash should be disclosed for how many years? Sir, for 5 years, immediately preceding the date at which the balance sheet is prepared. For 5 years, we should disclose it. 5 years from immediately preceding the date at which the balance sheet is prepared. The second thing is in case of bonus shares, again 5 years immediately from the preceding date. The third one is buyback. In all the three cases, 5 years. Disclosure only if such events has occurred during the period of 5 years immediately preceding the current year balance sheet. The terms, if there are convertible equity or preference shares, the terms of any such securities converting into equity or preference shares issued along with the earliest date of conversion in descending order starting from the farthest such date. Means in case of convertible debentures, in case of convertible preference shares, the terms and conditions should be disclosed. Calls unpaid by the directors and officers should be disclosed separately. Calls unpaid should be disclosed, and calls unpaid by the directors and officers should be disclosed separately. Forfeited shares, the amount actually forfeited should be disclosed separately. See, in case of in case of chapter number 2, we will only discuss the format, because the thing is the sums are relating to the format itself. In case of cash flow, we had understood various sums because it was a bit tricky part. But in case of schedule 3, if you understand the format and if you practice few sums, you will be comfortable enough. So this should be classified in long-term liability, non-current liabilities. This should be classified as long-term borrowing. This should be classified as short-term borrowing, and so on. So my first part, which is share capital, is completed now. The second part is reserves and surplus, which is more important wala part. The sequence is more important actually. In case of reserves and surplus, please follow the sequence also. First is capital reserve, second is capital redemption reserves, third is securities premium, fourth is debenture redemption reserve, fifth is revaluation reserve, sixth is share outstanding option account, specific reserves if any, and the last one is surplus of the balance sheet. First is capital reserve, then is capital redemption reserve, which is CRR, then is securities premium, then is DRR, then is RR, which is revaluation reserve. Shares outstanding, last is any specific reserve, and eighth one is surplus. So capital reserve is a reserve of the corporate entity which is not available, for distribution as dividend, which is not available for distribution as a dividend. Please keep this thing in mind. CRR is required to be created under section 55 and 68, which we will cover in chapter number 1. Securities premium. Use the term, hence the term used in the X should be used. Securities premium is the same, yeah? We know the difference. In case of DRR, we will also understand the same in chapter number 1. What is the meaning of DRR? Revaluation reserve is the reserve created on the revaluation of assets or net assets of the enterprise represented by the surplus of estimated replacement value. Share options outstanding account. As per ICI guide note on ESOPs. See, this will not be asked, but still remember the ESOPs wala part. In case of ESOPs, you should create a reserve. That's all. The most important thing is this surplus. That is the balance in statement of profit and loss account disclosing allocation and appropriation such as dividend, bonus, shares transfer to reserves and surplus. Addition and deduction since last balance sheet to be shown under each of the specific heads. Some important points. The reserves specifically represented by the unmarked investment shall be termed as funds. Debit balance of the statement of profit and loss account should also be shown under negative figure under the head surplus. Similarly, the balance of reserve surplus after adjusting a negative balance of surplus, if any, shall also be under the reserves and surplus even if the resulting figure is the negative figure. So what? We will do question number 3 for this. Forfeiture Limited has the following items under the reserves and surplus in the balance sheet. Securities premium 80, capital reserve 90, general reserve 60 and 90. The company has an accumulated loss of 250 on the same date, which has to be disclosed under the head statement of profit and loss account as asset in the balance sheet. Comment on the accuracy of the treatment in line with Schedule 3 of the Companies Act. See, first we will calculate the correct figure. So in case of reserves and surplus, first there is capital reserve. So do we have any capital reserve? Yes, we have capital reserve of 60 lakhs. Capital reserve of 60 lakhs. After capital reserve, do we have any CRR? No, sir. After CRR, there should be securities premium. Do we have any securities premium? Yes, we have securities premium. Securities premium amounts to 80. After securities premium, do we have any DRR? No. Revaluation reserve? No. Any ESOPs reserve? No. Any specific reserve? No. So we will say general reserve now. General reserve is 90. Okay. And the last part is profit and loss account. And the last is profit and loss. But they have a debit balance of 250 lakhs. 250 lakhs ka debit balance. So the net figure, which is 60 plus 80 is 140 plus 90 is 240. 240 minus 250. 10 lakhs negative balance. This should be shown under 10 lakhs should be shown under reserves and surplus as negative 10 lakhs only. We should not transfer this to profit to balance liability asset side. It should be shown under liability side only as negative 10,000. This should be shown under liability side only as negative 10,000. Anisha, thank you so much. So share application money pending for allotment. Share application money not exceeding the issued capital and to the extent not refundable is to be disclosed as a separate line item after shareholders fund and before non-current liabilities. If the company issued capital is more than the authorized capital and approval of the approval of increase in authorized capital is pending, the amount of share application money received over and above the authorized capital should be shown under the head other current liabilities. See, simple words. If I've received the shares, but the allotment is still pending, it should be shown as share application money pending for allotment. Agreed? And the credits, and it will be shown in case of liabilities, it will be shown as non-current liabilities. If I have received the amount which is more than or greater than my authorized capital, the extra amount should be transferred to other current liabilities. These were the two important things. So comes to question. We should jump to now point number 7. Point number 7 was, so shareholders fund, share capital, reserves and surplus, money received against share warrants. Now non-current liabilities, part A, long-term borrowings and so on. Non-current liabilities. So long-term borrowing shall be classified. This is more important. There are a few questions relating to this part. First, bonds and debentures. Second is term loans. Term loan shall be further classified as from banks, from other parties. Deferred tax liabilities. Deposits, loans and advances from related parties. This is also important. Long-term maturity of financial lease obligation, and last is other loans and advances. So please keep these three things in mind. 1, 2, 3. Bonds and debentures is first. Second is term loan. Term loan is further bifurcated into from bank, from other parties. And third is loans and advances from related parties. Please keep these three things in mind. Other points which should be noted. Borrowing shall be further be subclassified as secured and unsecured. Nature of security shall be specified separately in each cases. Most important point in this case. So there will be a question. Debentures are 40 lakhs. Plant and machinery of 50 lakhs is given as a mortgage. So we will say, in case of long-term borrowing, we will say secured borrowing. It will be debentures 40 lakhs, and we will write secured against plant and machinery amounting rupees 50 lakhs. Amounting rupees 50 lakhs. Where loan have been guaranteed by directors or others, the aggregated amount of such loan under each head shall be disclosed. Normally, this type of questions are not asked in the exam. Bonds and debentures shall be stated in descending order and so on. This is also not asked in the exam. Particulars of any redemption bond debentures with the company has power to reissue should be disclosed. This should be covered still. The term of repayment of term loan and other loans shall be stated. The period and amount of continuous default as on the balance sheet date in repayment of loan and interest shall be specified separately in each cases. So the following points should be remembered. First point is, in case of long-term borrowing shall be classified. There are 6-7 classification, but we should remember only the 3-1. Bonds and debentures, term loan, which shall be further classified as from bank, from other parties, and third one is loans and advances from related parties. Each and every loan should be further classified as secured loan and unsecured loan. In case of secured loan, you should also specify the security. In our case, it was plant and machinery amounting rupees 50 lakhs. Other long-term liabilities. See. So long-term borrowing done? Yes. Deferred tax liability? Yes, done. See, you will get a figure. This is a deferred tax liability. You should write that only. Other long-term borrowings. Other long-term liabilities. We should scroll it a bit more. Other long-term liabilities are further classified into two types. One is straight payables and others. Trade payables and others. Sundry creditors for goods or service and acceptance should be disclosed as a part of trade payable. Sundry creditors for goods or services and acceptance should be disclosed as a part of trade payables. Means if you have purchased goods or services, from a certain person, we will classify them as trade payables. If that person has accepted your bills, still we will classify them under trade payable. Sir, if I have purchased an asset from a particular person, then it should be classified in others. If you have purchased any assets, they should not be classified under trade payables. Amount due under contractual obligation. Example, statutory obligations like provident fund, purchase of fixed assets, contractual reimbursement expenses, interest accrued on trade payables, etc. should be classified as others, and each such item should be disclosed nature. This is more important. Please keep this thing in mind. Only goods and if you have purchased goods and services, and if there is a bills payable relating to that creditors, they should be classified under trade payable. Anything apart from these two shall be classified as others. Means I have purchased a machinery from a particular person and I have to pay him 1 lakh, 2 lakhs extra, etc. amount. So that 2 lakhs should not be classified as trade payables, but they should be classified as others. And others, we will write statutory obligation, amount payable against capital, against purchase of capital asset. So long-term provision is classified into two parts: provision for employee benefits, others. Provision for employee benefits is classified as short-term and long-term provision. So what are employee benefits provision? Gratuity, leave encashment. I think we have heard these two names in our income tax syllabus as well. Chalo. Short-term borrowing. So short-term borrowing is same as long-term borrowing. Long-term borrowing was bonds and debentures, term loan from bank, from others, and so on. Short-term borrowing is loan repayable on demand from bank, from other parties, loans and advances from related parties, deposits, etc. Please, this is the most important classification. Many questions are around the bush. Other points, these points are same as the points which we have covered in our long-term liabilities. Trade payable, total outstanding due to micro and small enterprises. The micro, medium and small, micro and small, only micro and small enterprises. Please keep this thing in mind. Total outstanding due of creditors other than micro and small enterprises. The following points should be detailed in case of micro, small and medium enterprises shall be disclosed. The principal amount and the interest due, the amount of interest paid by the buyer, the amount of interest due and payable for the period of delay in making the payment, the amount of interest accrued and remaining unpaid at the end of the accounting period, and the amount of further interest remaining due and payable even in the succeeding years. See, the principal and the amount of interest due, the amount of interest paid by the buyer, the amount of interest due and payable for the period of delay in making the payment in the current year as well as in the succeeding years. Other current liabilities, ETC, simple words mein ETC. Other current liabilities shall be classified as current maturity of long-term borrowing. Current maturity of long-term borrowing. Long-term borrowing was my bonds and debentures. If they fall within 12 months, they should be classified as current maturity of long-term borrowing. So example, see, I have debentures of 100 lakhs. Out of this 100 lakhs, 95 lakhs are repayable after 3 years. 5 lakh is repayable after 2 months from balance sheet date. So this will be classified as current maturity of long-term borrowing, and this will be classified as long-term borrowing debentures. Hopefully we are clear with this wala part. Same goes for current maturity of financial lease obligations. The third one is interest accrued but not due on borrowing, interest accrued and due on borrowing, income received in advance. I should highlight these things. Interest received in advance, unpaid dividend. Unpaid dividend. This is the most important thing, which we normally forget. Application money received for allotment of securities and due for refund and interest accrued thereon in case of oversubscription. Unpaid matured deposit and interest accrued thereon, unpaid matured debentures and interest accrued thereon, others payable. See, the most important thing is current maturity of long-term borrowing, unpaid dividend. Short-term provision is same as long-term provision. Provision for employee benefits, others. Other provision may include provision for dividend, provision for warrants, provision for tax, etc. Sir, ऊपर क्या था फिर? ऊपर was unpaid dividend. Dividend is not paid. In case of provision for dividend, it should be classified as short-term provision. If the dividend amount is declared but not yet paid, then it should be classified as unpaid dividend. Now we will jump to our asset side. Non-current assets, tangible assets. Classification shall be given as land, building, plant and machinery, fixtures and furnitures and fixtures, vehicles, office equipment, etc. The reconciliation of the gross and net carrying amount of each class of the asset at the beginning, at the end of the period, showing addition, disposal, acquisition through business combination and other adjustment, and the related depreciation and impairment reversal shall be disclosed separately. Sir, simple words में we should show the following things. In case of my plant and machinery, I should reflect the opening balance, additions or purchases during the year, deletion or sales during the year, any depreciation, writing off or impairment loss any, and last will be the closing balance. Bas, that's all. Other points which are more important: asset under lease shall be separately specified under each class of assets. Where sum has been written off on the reduction of capital or revaluation of assets, or where the sum has been added on revaluation of asset, every balance sheet subsequent to the date of such written off or addition shall show the reduce or increase figure as applicable, and shall by a way of a note also shows the amount of the reduction or increase as applicable together with the date thereof for first 5 years subsequent to such reduction or increase. Value of revalued asset method adopted to compute the revalued method, nature of indices used, year of appraisal, involvement, extension, values, etc. as long as the concerned assets are held by the enterprise should be disclosed, but only for 5 years period. Only 5 years is specified in Schedule 3. Agreed? So keep this thing in mind. If you are revaluing any asset and revaluation is either upward or downward, the same should be disclosed for first 5 years. If the asset is the leased asset, that should also be disclosed separately. So capital work in progress, capital advances should be included under long-term loans and advances, and not to be included under capital WIP. If you have paid any advance, to your asset manufacturer, that should be classified as long-term loans and advances and should not be classified under capital WIP. In case of intangible goods, trademark, software, and so on. So non-current investments are important now. Investment in equity instruments and preferential equivalents, trust, debentures, bonds, mutual funds, partnership, any other investment should be classified as non-current investment. Note to be disclosed: under each classification, details shall be given of name of body corporates, their subsidiaries, their associates, their joint ventures, control, specific purpose entities, etc. In case of partnership firm, name of their partners should also be disclosed along with the total capital as well as the share of each partner. Investment carried at other than cost shall be disclosed separately. Following should also be disclosed. Quoted, this is more important. This is important. This is important. Aggregated amount of quoted investment and the market value, unquoted investment, provision for diminishing in the value of investment. Quoted investment means which are tradable in the share market, unquoted which are not readily available or traded in the share market. Long-term advances, capital advances, security deposits, loans and advances to the related parties. These three things should be disclosed. See, in the previous case, they were my liability, means I have taken loan from the respective parties. In the current case, I have given an advance, I have given a loan. So this is my asset. Capital advances against capital assets. Security deposits, I have taken some security deposits, I have given loan to my related parties. In these three cases, they should be further classified as secured, considered good, unsecured, considered good, doubtful. Secured, considered good means they are secured against and security like plant and machinery. Means if they are not willing to pay us any amount, we can capture their land, their building, and so on. Unsecured, but they will pay. Doubtful means I think he is not going to pay me at all. Allowance for bad and doubtful debts and advance shall be disclosed under the relevant head separately. Current investments are copy paste of your non-current investments. Inventory is important. This part is also more important. Inventory shall be classified as raw material WIP finished goods, raw material WIP finished goods, stock and trade, stores and spares, loose tools, and others. See, raw material WIP finished goods. We know this thing. Sir, what is stock and trade? See, I've purchased this pen and I will sell it. I'm not going to manufacture it or modify it and then sell it. So in case of manufacturing company, they purchase the raw material, they produce or they add some value to it, and after that they sell it. So they add finished goods, that is termed as finished goods. But if I'm directly purchasing and selling it, just like an activity of trading, so these kinds of inventories are termed as stock and trade. Yes, these should be further classified as stock in transit shall be disclosed under each relevant head. Mode of valuation shall be stated for each relevant head. Trade receivable shall be classified into two parts. Trade receivable outstanding for a period exceeding 6 months, others, and they shall be further classified as secured, unsecured, and doubtful. Cash and cash equivalent. This is also more important. First, balance with bank. Then is check draft on hand. The third one is cash on hand. First with bank, then in hand. See, the sequence is also equally important. Chalo, we should go now. Short-term loans and advances. Yeah, it's same as your long-term loans and advances. Refer point number 17, notes for disclosure. Other current assets, same. Contingent liabilities and commitments are more important now. Contingent liability shall be classified as claims against company not acknowledged as debt, guarantee, other money for which company is contingently liable. Please keep these three things in mind. Commitments shall be further classified as estimated amount of contract remaining to be executed on capital account and not provided for uncalled liability on shares and other investment partly paid and other commitments. See, the three important things are this, this, and this. These are the three important areas where questions are usually asked. In case of contingent liability, first is claims against a company not acknowledged as debts. Guarantees given by the company. Third is estimated amount of contract remaining to be executed on capital account and not provided for. Means first one first in case of A, in case of contingent liability, in case of A, example, the person is saying, Nikhil, I have sued you because you have not paid me X amount. But I am saying, see, I am a right person. I have not done anything wrong. So whatever you are saying, I am not going to pay you. The second thing is guarantee. See, if bank, please give loan to Mr. A. If Mr. A is unable to pay, I guarantee you that I will pay on behalf of him. And the third part is, I have purchased and fixed a set of 50 lakh rupees. I have purchased and fixed a set of 50 lakh rupees. For this 50 lakhs, I have paid 35 lakhs in advance. I have paid 35 lakhs in advance. 50 lakh asset is still work in progress. I have not yet received any asset, But out of 50 lakhs, I have paid 35 lakhs. 15 lakhs is still pending, which I am liable to pay. So that 15 lakhs will be covered in point A of commitments. So we are done with our balance sheet. Now comes to profit and loss account. So revenue from operations, other income, total income. Revenue from operation means, see, we have to further bifurcate this as revenue for companies other than financial companies. In case of financial, other than financial companies, it will be from sale of product, sale of service, other operating revenues, less excise duty, if any. In case of financing, it will be interest, other financial services. The interest means, sir, I have given him a loan. I have given him a loan for which I'm charging an interest. That interest will be covered as my revenue only in case of financial company. Also, for processing his loan, I have charged him a processing fees. That should also be covered here. I am also providing some discounting service. So that will be also covered in this service if you are a financial company. In case of manufacturing company or in case of company other than financial companies, we will classify as sale of goods. I've sold a product, sale of service, I've provided you a service, other operating revenue like royalty and so on, less excess duty. Other income means I have collected other income other than which I've earned from my operating activity, like profit on sale of machinery, like a bit of interest, dividend, rental income, and so on. So this is my total income. And now comes to cost of material consumed. Cost of material consumed. Cost of material consumed is nothing but opening plus purchases less closing. But opening what? Opening raw material plus raw material purchase less closing raw material. The difference is termed as cost of material consumed. Second is purchase of stock in trade. So yeah, I've given you the example. Stock in trade means, see it, I will purchase the material and as it is, I will sell it. I will not do any kind of value addition, just like a trading business. So purchase of stock or in trade and change in inventory of finished goods, WIP and stock in trade means opening less closing of FG, WIP and finished and stock in trade. Employee cost, finance cost, depreciation, amortization, and others. See, so first we will go to finance cost. Finance cost shall be classified as interest expenses, the interest which I am going to pay. Other borrowing cost. Other borrowing cost can be termed as discount, can be termed as other loan fees, and so on. Applicable net gain or loss on foreign exchange currency transaction and translations, which we will understand in our accounting standards. Other income, interest income, dividend income, and so on. Employee benefit expenses, salary, wages, bonus, provident fund contribution, professional tax paid, gratuity paid, leave encashment paid will be classified under employee benefit expenses. Finance cost is covered, depreciation and amortization of expenses also covered. Other is apart from all these things. So there is profit before extraordinary exception and extraordinary item, then exceptional item, then extraordinary item, profit before tax, then tax. Tax will be bifurcated into current tax and deferred tax. It will be profit from the continuous operation. We will add profit and loss from the discontinuing operation, tax expenses for the discontinuing operation, profit and loss from the discontinuing operation, net profit and loss for the period, and we will calculate the earning per share, which is known as EPS. So the most important things are this, don't focus, these are useless currently for you. Currently from the examination point of view, these points are useless for you. Remember this one part. If they can ask this or discontinuation, that's all. This is then they have actually asked a few questions relating to characteristics of liability. So we will try to cover the same. Normally, liability arises from the present obligation, but future obligation may also create liability if they are irrevocable. A forward contract to buy a contract is irrevocable. Therefore, gain or loss on such contract is evaluated and recognized as an asset or a liability. You can read the following points, you will get the answer. Same is for contingent liabilities. The sums are easy in case of Schedule 3. Just you have to just you have to read the format of Schedule 3 2-3 times, understand them, and you will be confident enough that this will go in this file apart, that file apart, and so on. And the questions, while solving the MCQ questions, if you have solved the MCQ question of the institute, that is a good thing. If you have not solved the MCQ questions, just a small request, try to solve these things. They have provided 6 sets for you, and you can give around 10 times each set. You will be comfortable enough in case of the MCQ scenarios. For the sums, they are asking case of what is the closing balance of balance sheet, what is the closing amount of balance sheet, and so on. So we will go to our first chapter, which is shares and debentures now. See again, equity share capital is bifurcated into nominal or authorized share capital, issued, subscribed, called up, paid up, and arrays, which we have seen. Issue of application form for securities. This is useless thing. Refund of application money. This is more important. The 15 days and the terms and conditions will be important. They can be asked in the form of MCQs. If the stated minimum amount has not been subscribed and the sum payable on application is not received within the period specified therein, then the application money shall be repaid within a period of 15 days from the closure of the issue. And if such amount is not repaid within such period, the directors of the company who are officers in default shall joint and severally be liable to repay the amount with interest at the rate of 15% per annum. So if the minimum subscription is not received, sir, if the minimum subscription is not received, the amount is repayable within 15 days from the last date. If the amount is not repaid within 15 days, the officers in default should pay 15% as interest. Call on share. Out of the face valuation, 5% is payable on application. This is more important thing. The minimum 5% is paid on application. So now we will directly jump on our accounting entries and so on. So in case of application money and in case of allotment money, we will understand few entries. See, this is more important part. Huh? In case of application and allotment, we will understand few entries. So in see, shares are nothing but just like sale of goods. The entries in case of shares is nothing but like sale of goods. So I will ask you a question. Mr. X rupees 20,000 goods sold to Mr. X. Rupees 20,000 goods sold to Mr. X on credit. The entry will be to sales account, Mr. X account debit. Mr. X account debit to sales account 20,000, 20,000, 20,000. At the time of receipt from Mr. X, we will pass the entry cash received from Mr. X. Cash account debit to Mr. X account 20,000, 20,000. One more thing. In the second scenario, Mr. X has given me advance of 20,000. Mr. X has given me advance of 20. Nikhil, I loved your goods here. I want to give you an advance of 20,000. So we have received an advance of rupees 20,000 from Mr. X. So the entry will be cash account debit to Mr. X, advance which we have received, which is 20,000, 20,000 at the time of supply of goods, at the time of sale of goods. We will pass the following entry. Sir, we have sold the goods. So the entry will be to sales 20,000. Since amount is already collected from Mr. X, we will write Mr. X account debit. Agreed. These are the following two entries which we are passing from our 11th grade, I guess. Same entries are used in case of share capital as well. These entries are relating to application. These entries are relating to allotment. In case of application, advance money is collected from the shareholder. So the entry is cash account debit. Cash account debit to application account, to share application account. When the shares are allotted, the entries instead of Mr. X, we will write share application account debit to sales, because we are not selling goods, we are selling shares, to share capital account. share application account debit to share capital account. Same way, in case of allotment, first shares are allotted, then money is asked for. So in case of Mr. X, we will write share allotment account debit to sales nahi, because we are not selling goods, we are selling shares. So it will be to share capital account. And when cash is received or collected from Mr. X or from the shareholder, we will write cash account debit to share allotment account. Easy entries, no need to worry. Following entries are used. So you have written the entries which we should pass and their relevant extract. On the receive of application money, it's just like payment of advance. So when advance is received, the entry is cash account debit to Mr. X or to advance. So in the current case, we will write cash account debit to share application account. When that advance is used against supply of goods, the entry is Mr. X or advance account debit to sales. In our current case, advance should be replaced by share application account debit to, we are not selling goods, we are selling shares, to share capital account. Same in case of allotment. In case of allotment, it is an credit sales debtor account debit to sales, which is nothing but share allotment account debit to equity share capital. At the time of receipt of payment, the entry will be cash account debit to share allotment account. So 1, A, B and D and F entries are done. In case of securities premium, you are charging one thing extra. So we will say share application account debit. A share application is 50 rupees. Out of that 50 rupees, 40 rupees is for equity share capital, 10 rupees is for securities premium. So while bifurcation, we will say, we have received 50, 50. Out of this 50, 40 is for equity share capital, 10 is for securities premium. So we will credit equity share capital by 40 rupees and securities premium by 10 rupees. Same is the case for my allotment as well. So we are done with this wala part, sir. In case of refund, it is reversal of your application. On receipt of application, the entry passes bank account debit to share application. The reversal of that will be share application account debit to bank. Share application account debit to bank account. Purchase of fixed asset by payment in cash. Purchase of fixed asset by payment in cash. If I purchase plant and machinery, my entry will be plant and machinery account debit to cash oblique bank. Instead of cash, if I'm using shares, so my entry will be purchase my plant and machinery or oblique my any asset account debit to equity share capital. If there is any securities premium, so we will also say to securities premium, if any. The entries in this case are very easy. The only thing is, lesson number 1 is a bit lengthy and many concepts are covered, like equity share, what I can say, forfeiture, then oversubscription, then reissue, then preference shares, then debentures, then underwriters commission, and so on. This is a major drawback with this lesson. Otherwise, this lesson is extremely easy and good, but a very lengthy lesson. Keep these 3 things in mind. Securities premium, as we have discussed, is a securities premium we will discuss in our next part. A company may issue shares at a premium, that is the value which is greater than the face value. The power to issue shares at a premium need not be given in articles of association. Please keep this thing in mind. This can be used as an MCQ material. Premium so received shall be credited to the separate accounts called securities premium account or share premium account. Securities premium account, the usage of securities premium is restricted, and in only these 5 situations or cases securities premium can be used: for issue of fully paid up bonus shares to the members of the company, for writing of preliminary expenses of the company, for writing off the expenses of commission paid or discount allowed off on any issue of shares or debentures of the company, and for providing premium payable on redemption of redeemable preference shares or debentures of the company for purchase of its own share, means buyback of shares. In the following 5 cases only, securities premium can be used as per section 52. Please keep this thing in mind. So what are these 5 sections? Bonus, preliminary expenses, write-off of discount or commission at the time of issue of shares or debentures. Fourth one is at the time of redemption of preference shares or debentures, the premium paid can be adjusted. We have seen this thing in our cash flow wala example. Apart from this, you can use securities premium for buyback as well. These are only the 5 ways in which securities premium can be used as per section 52. There is one more section. The company whose financial statement comply with section 133. The company whose financial statement comply with section 133. The restrictions are increased in such a case following in this case if company is following section 133, securities premium can be used in only following 3 cases. One is on issue of bonus shares, second is buyback of shares, third one is writing off of expenses of commission or discount allowed of any issue of equity shares of the company on equity shares of the company. So in case of securities premium, the ways are bonus, buyback, preliminary expenses, commission or discount on issue of shares and debentures, redemption of preference shares and debentures. But if the company is following section 133, it can be used only for bonus, buyback, preliminary expenses of only equity shares. In this case, it can be equity shares, preference shares, debentures. But if you are section 133 company, then it will be only preliminary issue expenses only in relation to equity shares. This is the most important thing. This is an MCQ material, full MCQ material. The most important point is if the premium has already received by the company, it cannot be cancelled even if the shares are forfeited in future. Prohibition on issue of shares at discount. Shares cannot be issued at discount except in case of ESOPs. Except in case of ESOPs, shares cannot be issued at discount. So shares can be issued at face value or at premium, but they cannot be issued at discount. So the adjustment entries are now we will again understand few more adjustment entries if we have received or if we have collected some extra amount or if there is some oversubscription. How should that be accounted for? See, the entries are application money received for 3,000 for 1,000 shares of rupees 3 each. So the person has applied for 3,000 shares by paying applied for 1,000 shares by paying an application money of 3 each. My entry will be I've received a cash of 3,000 rupees, so bank account debit 3,000 to share application money 3,000 rupees. Out of this 1,000, I've only allotted him 700 shares. So for 700 shares, my entry will be, since I have sell only 700 shares, to share capital 700 into 3, which comes to 2,100. So I will ask him only 2,100 to share application account debit 2,100 to share capital account 2,100. The remaining 900 balance can be used against share allotment. See, application money on rupees 500 share is due. Balance amount against allotment. My bad. Is there something wrong? So allotment money allotment money, huh? Allotment money of rupees 5 on 700 shares. I am asking for rupees 5 as my allotment money. Since I've allotted him only 700 shares, my entry will be share allotment account debit to equity share capital 3,500, 3,500. So I will tell him, yeah, you should give me 3,500. So he will say, Nikhil, out of this 3,500, I've already paid you kitna 900 rupees extra. I've already paid you 9,900 rupees extra. So the remaining amount I will pay in cash, 900, you should adjust from my previous payment. So my entry will be, see, two share allotment account, share allotment account, it will be two share allotment account. Two share allotment account, 3,500. Out of this 3,500, he has already paid me 900 rupees. The balance amount which is receivable from him is 2,000, 2,600. So the entry will be bank account debit 2,600 to share allotment account 3,500. The balancing figure, which is 900, the account which will be debited is share application account. So my entry will be bank account debit, share application account debit. For that advance of 900, I will receive 2,600 via cash. 900 I've already received. So I will say 900 I've received at the time of share application. So share application account debit 900, bank account debit 2,600 to share allotment account 3,500. Sure. In case of calls and advances and calls in arrears, this point is most important. The third point, maximum interest. So the maximum interest which can be charged on calls in arrears is 10%. And the maximum interest which you can pay on calls and advances is 12%. So on so forth. We should move now to the forfeiture of shares which were issued at par. So before moving to this part, we will understand the share capital entries once again. Shares are, so we have received an application money of 5,000 rupees. We have received an application money of 5,000 rupees. We have received the cash, so cash bank account debit to share application account. Amount will be 5,000, 5,000. Now for this 5,000 application, we have allotted the shares. The second entry will be share application account debit to equity share capital account. Entry will be again 5,000, 5,000. The third entry will be, in case of allotment, sir, allotment is again of 10,000 rupees. Chalo. In case of allotment, first we will sell the goods, then we will receive the payment. So in case of goods, we are selling equity share capital. So it will be equity share capital 10,000, and we are asking for 10,000 rupees from him to share allotment account debit 10,000 to equity share capital 10,000. When the amount is received by him, it will be bank account debit to share allotment account. Amount will be again 10,000 and 10,000. Khatam. So this was the normal entries. The second thing is, in case of oversubscription, we have passed the above entries. Now is forfeiture of shares. And how to pass the entries in case of forfeiture of shares. So we will understand this as well. Goods sold to Mr. X rupees 20,000 on credit. was sold to Mr. X or rupees 20,000 on credit. My entry will be Mr. X account debit to sales account 20,000, 20,000. Sir, out of this 20,000, Mr. X has paid us 7,000 rupees. Cash received from Mr. X rupees 7,000. Entry will be cash account debit to Mr. X account 7,000. 7,000. Now Mr. X is saying, Nikhil, I'm not interested in your products here. Nikhil, I'm not interested in your products. I'm returning you to your product. So it is just like a sales return. It's just like a sales return. Returned by Mr. X. So this is like a sales return. The entry will be exactly the opposite of my sales. Whatever entry I've passed in case of my sales, the entry will be exact opposite. My entry will be Mr. X to sales. So my entry will be sales account debit Mr. X account. I've sold 20,000 ka goods, so I should receive 20,000 ka goods. 20,000, so sales account should be debit by 20,000. Out of this 20,000, Mr. X has paid me 7,000. So if Mr. X has paid me 7,000 and now Mr. X is returning the goods of 20,000, I should pay him back 7,000. So I will say for 20,000, Mr. X, you have paid me 7,000. So I'm returning you 7,000 back. And for the balance 13,000, it was pending from your side. So I've credited your account by 13,000. Out of 20,000, 7,000 has been received. So for 7,000, I'm paying you in cash and 13,000, I'm crediting your account. Happy? In the same way, shares entries are passed. In the same way, sir, shares entries are passed. Example, we can take an example. Application money received is, and application money is 15,000, yes, 7,000. Allotment money is 13,000. So total amount which should be receivable from Mr. X was 20,000. Means I've debited my application account by 7,000, allotment account by 13,000 and credited my share capital account by 20,000. So for every debit there is a credit, and I have credited my share application equity share capital account by 20,000. So now Mr. X has paid me application money. Yes, received. This is still pending. And now I'm saying, yeah, Mr. X, you are not paying me amount, so I will forfeit your shares. I'm going to forfeit your shares. So in such a case, it will be just reversal. It will be just a reversal of your normal entries past. You have credited share equity share capital account by 20,000. Now you should debit equity share capital account by 20,000. So my entry will be equity share capital account debit 20,000. Out of this 20,000, you have received 7,000 in cash. You are paying Mr. X, take your 7,000 back. So to cash account 7,000. And for the remaining amount, Mr. X is not yet paid. So you have debited your allotment account. Now you are crediting your allotment account. So to share allotment account credit 13,000. So your entry is, see, you have debited application account first, but in case of application, you have received the cash. So application should be replaced by cash account. So you have debited cash account and you have debited allotment account and you have credited equity share capital account. Now you should do the reverse. Equity share capital account should be, we should pass the reverse entry. Equity share capital account should be debited. cash account should be credited, share allotment account should be credited. But there is a simple twist. You are not going to give back even a single penny to Mr. X. So instead of crediting cash account, you should credit forfeiture account. So we should credit forfeiture account. Hopefully we are comfortable with this thing. So these were the few things. And in case of reissue is nothing but like, so reissue is nothing but like your share application, share allotment related entries. So we should jump to our point 16, which is a right issue, where at any time a company having a share capital propose to increase its subscribed capital by the issue of further shares, such shares shall be offered to the person who at the date of offer are shareholders of the equity shares of the company. So means, simple words, I can say, if you are my existing shareholders and if I want to issue new shares, first I should ask you, first I should give the right to you. Means first you should purchase. If you are saying, Naya Nikhil, I don't have money, then I will approach some other shareholders. See, I'm your old shareholders. First you should ask me, do you have money? If I have money, I will invest in a company. But if I don't have money or if I don't want to invest in a company, then you can go and ask someone else. But first you should ask us. This is the right given to the existing shareholders. This is the right given to the existing shareholders. So many times we should value this right. So first we will discuss few points, the highlighted ones, and then we can go for the valuation part. Where at any time a company having a share capital propose to increase its subscribed capital by the issue of further shares, such shares shall be offered to the person at the date of offer are holders of the equity shares of the company. The offer shall be made by notice specifying the number of shares offered and limiting the time not being less than 15 days and not exceeding 30 days. So the minimum time frame should be 15 days and the maximum should be 30 days. And the communication should be done via notice. And from the date of the offer within which the offer, if not accepted, shall be deemed to have been declined. So see, the company should offer. The offer period is from minimum 15 days, maximum 30 days. If after 30 days they have not accepted the offer, means they have rejected the offer. Unless the articles of the company otherwise provided, the enforceable offer shall be deemed to include right exercisable by the person to renounce the share or offer to him or any of them in the favor of any other person, and the notice referred to in clause 1 shall contain a statement of this in writing. Means, sir, if I don't want to purchase your shares, but I have the right to purchase your shares at a discount price than others, so can I sell this right? Yes, you can sell this right. Selling this right is known as renouncement of right. And there is no, please keep this thing in mind, there should be no any clause to restrict it. If articles of association is silent, you can renounce the right. If articles of association restrict it, then you cannot renounce your right. After the expiry of the time specified given in the notice or the receipt of the earlier intimation from the person to whom such notice is given that he declines to accept the offer, the board of directors may propose of them in such a manner which is not disadvantageous to the shareholders of the company. See, if you have rejected my offer, I should approach some other shareholder. But by approaching him, I should not punish you. The company should not punish you in any manner. Now comes valuation of right. Usually the company offers right, issued at a price which is lower than the market price of the shares so that the existing shareholders may get the monetary benefit of being associated with the company for the long time. Existing shareholders who have been offered right shares and do not want to purchase this offer shares may renounce their right shares in favor of some other person within the specified period as mentioned earlier. In such a case, the existing shareholders may make a profit by selling his right to such other person. The right can be valued in the terms of money as below. Calculate the market value of shares which an existing shareholder is required to have in order to get the fresh issue. Add to the above price paid for the fresh issue. Find out the average price of the existing shares and the fresh issue. The average price of the share should be deducted from the market price and the difference thus be ascertained in value of the shares. Sir, we are unable to understand whatever you have read. Nothing. We can do a particular sum. Don't worry. We will do question number 10. NT Limited has issued 20,000 equity shares of rupees 10 each fully called up. The issue right shares in the ratio of 1 fully paid up for every 4 shares held by him at rupees 15 per share. Agreed? Now you should calculate the market value. Existing held at 15 per share. Chalo, my bad. Just hold on a second. नहीं, ये वाला the company is planning to raise 3,000. The market value of share is 42. The company offers a shareholder to buy 2 shares at 11 each for every 5 held. Yes, we will calculate the question number. We will calculate question number 11. Or we can calculate question number 10 as well. But still, question number 11 will be a good one. The company is planning to raise funds by making right issue of equity shares to finance its expansion. The existing share capital of the company is 50 lakhs. The market value of its share is 42. The company offered to its shareholders the right to buy 2 shares at rupees 11 each for every 5 shares held. You are required to calculate the theoretical market price after right issue, the value of a right, and the percentage increase in the share capital. Check. We should start with see the existing is 50,000 and market value is 42. So it will be 5 lakh equity shares. The company offers to its shareholders the right to buy 2 shares at 11 each for every 5 shares held. So see, first I am saying question number 12. I am saying the face value I have assumed as rupees 10. I have assumed as rupees 10. So number of shares will be 50 lakh divided by 10. It will be 5 lakhs. The market price is 42. The company offered to shareholders the right to buy 2 shares at 11 each for every 5 shares each. So 2 shares for rupees 11 each for every 5 shares. So see, what are the steps? Calculate the market value of shares with the existing shareholder is required to have in an order to get fresh issue. Add the above price paid for the fresh issue shares. Find out the average price of existing shares and fresh shares. The average price of the shares should be deducted from the market price of the difference, thus ascertaining its value of right. सबसे पहले the first point is calculate the market value of shares which the existing shares is required to have in order to get fresh shares. See, minimum 5 shares are required. Market value of 5 shares is 5 into 42, which is 210 rupees. Add the above price paid for the fresh issue. Price paid for the fresh issue is 2 shares I've purchased at rupees 11 each. You can say rupees 42 each. Rupees 42 share is rupees 42. Chale. So the amount payable is 2 into 11, which is 22. Add the above price, find out the average price of the existing and the fresh shares. So first I will take the total. My total is 272. 272 is for 7 shares. 7 shares value is 272. Per share value is this divided by 7. My per share value is 33 rupees. My per share value is 33 rupees. The average price of the share should be deducted from the market price. Market price is, so market price is 42, average price is 33. So 42 minus 33 is 9 rupees per share. 9 rupees per share value is 9. Per share value is 9. This should be multiplied by 5 and divided by 2. Therefore, the value of right is, see, for 1 share it is 9 rupees. So 9 into 5 shares. 9 into 5 shares divided by 2, because you are getting 2 shares for every 5 shares. The value of share is 22 rupees. Follow these simple steps, you will get the answer. First, we should calculate the market price of 5 shares, existing shares, market price of the amount to be paid in case of fresh issue. We should find the total value, should be divided by number of shares, number of total shares, which is 7 now. Value per share is 33. The current value of the share is 9. Per value share is 9 rupees. Value of right will be 9 into number of shares, which is 5. Since for every 5 I am receiving 2, multiplied by 5, divided by 2. Therefore, the value of right is 22. The theoretical price of right is 22. Hopefully, we are comfortable with this point and we can get this answer right. This can be termed as an important part. I think I will conclude now. The remaining part will be addressed in the next session now, which will be at same time, 2 to 5. Vanjari sir, hello? Vanjari sir there?
Yes, sir.
सर मैं अभी कंक्लूड कर देता हूँ, क्योंकि इसका जो नया पार्ट स्टार्ट होगा ना, उसको 10 मिनट्स में नहीं कंक्लूड कर पाएंगे हम लोग.
ओके 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 सर.
ओके चलेगा. थैंक यू सो मच वंस अगेन. कल मिलते हैं. चलो बाय बाय. सर मैं मीटिंग लीव कर देता हूँ.